All right. Welcome back to the channel. So much to update you guys about. I'm going to try and stay focused. I'm going to be coming out with far more videos coming up this fall and going through the winter because I want to give you guys a lot of updates. Bottom line is, I'm living for free out here in Colorado, and I want to show you how. Let's start with interest rates, okay? Interest rates have dropped, and that's fantastic. They've fallen for 4 weeks in a row. It's at the 16-week or 16-month low now.
The time has come for policy to adjust.
And this is going to actually start sending a ripple effect throughout the real estate market in all facets, from the lower end of the market all the way up to the luxury side, the higher end of the market, which is fantastic news for me because, as I had mentioned in a recent video, I'm exiting the long-term landlording industry. For the first time in 21 or 22 years, I am out. I've got my last rental on the market for sale. It's been listed now for 60 days, even over that, now like 65 days. And it's been frustrating because I have had absolutely no bites. I've had some nibbles, a lot of interest, but buyers are just becoming more and more picky at that price point of that $700,000 to $750,000 price range. And my plan with that is to actually sell, pay the capital gains tax on that property, which a lot of people would try to avoid, but I have great reason for it. And a lot of it has to do with what we're going to be discussing here today, because I can get a lot more for my money by just simply focusing on the model that we're going to be discussing. Now, if you've watched some of our content over the last year to year and a half, then you know that in spite of some of the downturn in the economy, the properties in the higher end second home luxury space have actually been sustained by an influx of cash buyers. So they're not concerned with interest rates, which has had really the biggest impact on real estate of any other factor slowing down the market. But with the recent drops in rates, I'm confident that this is going to only boost the already hot markets even further. And that includes markets like the coastal areas of Florida. That's really been a diamond in the rough for real estate, particularly when it comes to the high-end luxury fix and flip space. And this is where the prefer method comes in. And that's, in a nutshell, an acronym for passive real estate flips, easy returns, where you can pick properties in these really strong higher-end markets that are not selling for their full value simply because they're outdated and they're really missing the key things that luxury buyers are going to be looking for. Most of the time we're talking about sellers who are aging out, maybe they're downsizing or they're going into sort of an assisted living type of situation, or even an estate sale where somebody has passed away. But when you're talking about somebody in their later years of life, why would they be investing hundreds of thousands of dollars to fix up their home, go through the construction process and manage that and turn around and try and sell it for maximum value themselves? And why would a buyer in that space spending multiple millions of dollars want to handle that type of project on their own? Most don't want to. So that's where the company like Southern Legacy can come in and snatch these deals up. And in many cases, they can get them for half of what they'll be worth after the construction is completed. And that is no different than today's deal. And I'm very excited because Southern Legacy was actually able to purchase this property for $1.45 million, and it has an after repair value with multiple appraisals supporting a $2.8 million estimated sales price when they're completed with the project. Now, if you chose to participate in that deal after this video, you could expect a 26% return, cash on cash, for the money that you get in on the project. Now, it does require at least a $50,000 contribution to participate. That's essentially a loan that's backed by a promissory note that's secured by the asset of the property, which obviously covers a lot of the risk that would be involved with any other types of investments that you might have the option to participate in. But here's the problem with these. The inventory on this is very low. It's picked up a little bit over the last few months. There's averaging out to be about a deal and a half a month now, which is significantly up from the around 10 that was done in all of the previous sort of 12-month timeline. I don't like that there's a low inventory of these, but when you're talking about a potentially $1.5 million in after repair equity, obviously those aren't sitting around long. But luckily, there's not as many fix and flippers in that space to compete against with either. With $50,000, you can get in on this very deal, and you will earn 26% on the loan that you're giving to fill the gap between the down payment and what Southern Legacy, the construction company that's doing all the repairs on this, is borrowing for the first mortgage, as well as the costs of construction that they borrow as well. So they have the biggest investment by far to make this project happen, get it done on time, get it done under budget, and also do the highest quality work that they can so that it sells quickly and is the most appealing property in the area for buyers that are coming in and looking to spend that type of money. In order to get involved in this project or any other projects, you've got to email prefer@vipfinancialeducation.com and essentially include your first name, last name, and phone number to be added to the list. And what that does is it gets you access to sort of an announcement email. That email went out just before the holiday, and rarely do these properties still have room for participation by the time I cut a video like this one. However, this one does. And so luckily for you, the holiday is distracted, folks, and you might still be able to get in as long as you move quickly. Just include a first name, last name, and phone number. It doesn't obligate you. You can still get all your questions answered, have a conversation, and perhaps you decide at that point this just isn't the one to get started with, and you want to get into another one, or maybe you're in on other deals already and you still want to get involved with this. You're more than welcome to there too. So with this model, let's talk about some of the benefits. Number one, it's passive, okay? You can see a lot of my equipment back here. This is one of my companies. I run a drain business. It's a multi-million-dollar company already after 3.5 years, and we're looking at expanding that into dozens of locations, and we serve small communities. It's called Small Town Drain. We're very, very proud of it, but it takes a lot of my time. I have multiple businesses that take a lot of my time. To feasibly take on projects that require even more of my time would be very difficult and probably impossible, quite honestly. You might find yourself in a similar position where starting somewhat of a side hustle or getting involved in another project where you can diversify your revenue streams, you just don't have the bandwidth for it. And that seems to be most people. So perhaps passive is what appeals to you most. And that's why I'm getting involved with the Prefer model here, and why I'll be using proceeds from the sale of my rental property once it closes to get involved in more projects. I've got $100,000 right now in a project that frankly I've been disappointed about. And the reason I've been disappointed is because it's taken a lot longer than I was told to expect. On this project, they're telling us 6 to 8 months. Now, why I'm optimistic and even willing to share that timeline with you right now is because this is a different construction company. What I do love is that they are centrally located where this property is. This property is in St. Petersburg, Florida. It's a hot, hot area. Florida is where this company specializes. They've got 3 full-time crews, 3 full-time general managers. They are big enough and do enough fix and flips throughout the year in that area where materials are literally even dropped off on the job site for them. They're not making trips to Home Depot. They're not trying to puzzle together a bunch of subcontractors to make this work. Unfortunately, with the first construction company, Maven, that we were working with, where my money is in on a project, that's how it went. A lot of unforeseeable or unforeseen delays. And if Maven and Joe had specialized in those areas, it probably would have been more predictable. Certainly nothing malicious or intentional. But when my expectations are one thing and then it doesn't end up happening as we hope, it is disappointing. So what I'm here to tell you is, think about the worst case here. What if this took 12 months or 15 or 18 months? Would you still be happy with a 26% cash on cash return compared to where you're passively investing your money right now? I would be, and I'll still be happy with the return I get on the project that's taken twice as long as I was told it would when it sells, even if it took another year. But I'm disappointed because my expectations were falsely set. And so that's what my job here is for you. I feel terribly that people who were involved in those projects with Maven are probably experiencing some level of disappointment as well. And I take some responsibility for that, because I'm the one here telling you that I've gone through a vetting process of my own. And we really had high hopes for those projects, and we're still waiting for a lot of the activity that we expect to see. Luckily, because the rates are dropping, we're starting to see some of those shake out now. So that is exciting. But with this, I just have a lot more confidence in the experience, and with the geographical specialization, I do think that Southern Legacy is just going to be a phenomenal solution to overcome those gripes that I've had. Now, with that in mind, let's talk about the deal specifically. This is 2032 Kansas Avenue Northeast. Go ahead and look it up for yourself. That's in St. Petersburg, as I said. That's 33703 as a postal code. I'll link that address in the description for you too, along with the other videos about other projects that have recently been featured, so you can do all your homework before you email. This is a 5-bedroom, 3-bath, 2,951 square feet. It's a pool with an eastern-facing lanai, absolutely gorgeous, as you'll see in the photos. There's no bridges out to Tampa Bay, and this has a clear shot for a boat. So for those high-end buyers that want to have that boat, this is going to be the perfect property for that. It's located in a private community, and it is exclusive in the exclusive Venetian Isles. Now, I lived in Clearwater just up the road from 2021 to 2023. So very recently, I was out there for a couple of years. I even met my significant other in St. Petersburg where she was living, and I absolutely love St. Petersburg. St. Pete is, in my opinion, the spot in Florida. Right there on the Gulf, it is absolutely phenomenal. Now, let's talk about the rehab. They're going to do a full rehab of the kitchen. They're going to demo it. They're going to actually open up the living areas. They want to create that open concept that everybody's in love with. They're going to expand the primary bathroom and closet. They're going to be adding a guest bathroom as well. Obviously, adding bathrooms and or bedrooms is always good for value. They're going to be putting new paint and flooring in, which is pretty standard on most of these rehabs that they're doing. The expiration date on this is September 10th. So if you want to get involved, you have to have at least $50,000 to do so. You've got to get involved before September 10th. I imagine it'll be gone long before that. These deals usually get snatched up within minutes, if not hours. It's becoming less and less. They're just going like this. This is the first deal I can remember doing in many, many months that is even still available by the time I cut this video. So most of the time, once you email your name and your phone number to prefer@vipfinancialeducation.com, you're essentially on a list where you get preferential treatment. You essentially get notified when a property like this comes out. We sent this property out just before the holiday, and people are able to then jump at it who are on the list first. And so by the time I cut the video, these are usually long gone. So I'm really excited today that other people can get involved. Like I said, it's a $50,000 minimum to participate. That money can come from anywhere. You could use it from a HELOC. That's what I did on the project that I got involved with. I've since paid the HELOC off by maximizing my investments elsewhere. And again, I'm going to go over other videos to teach you guys some of what I've done just to help you start thinking more creatively. You can use personal lines of credit, which I wouldn't typically generally recommend. Obviously, liquidity, cash in the bank, other types of investments that you might want to liquidate to get involved with this. Generally speaking, that would not involve your retirement accounts where you're going to be penalized or have to pay early withdrawal taxes. You can arbitrage this and get involved with family and friends. A lot of people have done that. So there's a lot of ways you can do this, and it doesn't require sort of the stringent underwriting that most real estate participation requires. And so I love that aspect of the Prefer method. The Prefer loan of $585,000, which is that total investment includes the down payment, it includes the mortgage costs, it includes the closing costs, it includes the construction fee, it includes the wholesale fee, it includes marketing costs. It also includes the 6 to 8 month carrying cost that they're anticipating for the timeline of this. Even if it goes longer, there is no capital call to us as lenders where you would not have to come to the table with more money. But if the project takes 12 months, you're still paid your 26% return, which means $13,000 on 50 grand. It means $26,000 on 100 grand. It means $52,000 on $200,000. You could get in on the full $585 if it were available. Now, the preferred lender secured loan that's going to be paid out in interest, this is what, as participants, we would earn if we got involved. The total of that is going to be $152,000. $152,100 is going to be paid out to the lenders that get involved with that $585,000 down payment. The purchase price on this, as I'd mentioned before, was $1.45 million, and the mortgage amount on it is going to be $1.68 million, and that includes the construction holdback on the project. Now, the rehab costs that they're anticipating putting into this job to just make this thing absolutely pristine and really stand out from anything else in the area is $650,000, guys. Think about that. That's over $200,000 for every 1,000 square feet on this property. And again, the appraised ARV on this is $2.8 million. So there is a ton of meat on this, and that's how they can afford to not just get us back our original loan, but also pay such an extraordinary return of 26% cash on cash. Because $150,000, $152,000 paid out in interest is just a very small portion of the profits that Southern Legacy gets to walk away with for doing all the work. They do all the work. That means you can live anywhere in the country. You sit back and wait for this thing to get done, put back on the market, and sold. Now, with that in mind, let's talk a little bit about risk, because I am generally speaking somebody that loves extraordinary returns. I'm not excited about small returns. I do have to have a couple $100,000 sitting in liquidity in the bank just to run my companies. I've got to make sure payroll is met, and it drives me crazy having hundreds of thousands of dollars sitting in the bank earning 4.5% or 5% in high yield. It drives me crazy. I'd much rather have that money in here making 26%, but I have to be conservative. I'm going to be looking for ways that I can get all my money working for me, even if it means that I am leaning into something like a HELOC. I would use my HELOC again for this if I could. Unfortunately, my home equity line of credit was recently used for a very expensive piece of machinery for my drain company back here. We spent $150,000 on this high-tech blue light lining equipment. It makes us one of the exclusive companies in all surrounding counties, and it allows us to really generate a tremendous amount of money. For example, just this last month in August, we pulled down almost $25,000 in revenues just from that new equipment. So it makes a lot of sense for me to invest in that for now. But again, once that's paid back, and once my property sells, I'm going to be dumping money back into these projects to earn that 26%. What I like about it is Southern Legacy takes on substantially more risk than I do. If I put in $100,000 or $200,000, so be it. They're taking out a mortgage of $1.65 million. Who's taking on a bigger risk? And if they're the ones doing the project, they have total control of how quickly they're getting the project done, how many hours they're putting in, the type of quality of craftsmen and women that they're choosing to hire, the material choices, the designers that they work with. They're calculating out the timelines and trying to make sure everything gets done under budget and within the time that they expect so that it can sell. And they're obviously going to be as conservative as possible. If the property has to sell for less than what they expect it will, their profits are the ones they're dipping into in order to reduce the price tag. They're not dipping into our promissory notes that we're secured against. So again, if you like the sounds of this, if you like the idea of having a lower risk, nothing is risk-free. Everything is going to have risk. Even my money sitting in the bank has risk. If you think FDIC is enough security for you to always get your money back, think again. Do your research. There is practically nothing, at least that I've come up with in my head, that is 100% secure. Burying your money in the wall. First of all, you're losing money to the inflation costs, the rising costs of living, but your house can burn down, right? You can bury gold in the backyard. How's gold performing, by the way? Check the last 20 years of gold values and look at what your returns would have been. It's nothing to brag about. So for me, I love the 20+% types of returns, but unfortunately they're very hard to find without something being a lot more demanding of your time, so you don't get that benefit of something being passive, or they just come with substantially more risk than what I've calculated this to be. So again, do your own homework, get on the waiting list, get your questions answered, decide if it's right for you or not. But I, for one, am somebody that is a huge believer in this, and I just simply don't come to this channel with something that I don't strongly believe in. You couldn't pay me to bring somebody on the channel that I don't strongly believe in. And the second I catch wind that something isn't working, I make a shift, and those people are no longer given access to you guys, my audience. So with that being said, hopefully you guys are going to find some value in this recipe. In order to do so, you got to email prefer@vipfinancialeducation.com. Put your first name, your last name, and your phone number, and at least get your questions answered. It does not obligate you to be on that waiting list, but you will have to start sourcing at least $50,000 of availability to get involved. And you will have to move quickly on these projects if you like something and you want to participate, because they just don't last. So with all that being said, guys, start doing something. That's all I can say. This economy is not going to forgive people who are being really complacent about their money and just simply relying on their day jobs to get them through till the end of your life. I mean, this is being proven right now that costs of everything just keep going up. And it is not good enough to just have an income from your day job. You are going to have to diversify. I always have at least about a half a dozen different income streams, and I am very, very careful to pay off my debt. This is all debt-free. I don't owe money when it comes to anything personal. Every single thing I own is completely paid off. Outside of my business, there are loans on some of the business assets. Those are assets that generate tremendous amounts of revenue. We're talking $50,000 to $75,000 a month in profits right now, and that's after my $7,000 a month distribution as well. I don't mind leverage, guys, you know that, but pay off those credit cards in full each and every month. Don't get involved in something like this if you are carrying that type of consumer debt. You really need to be addressing that stuff first. If you're paying 30% in interest on your credit cards, why would you take money that you could pay those off with and invest in something that's going to only pay you 26% return on your money? Yes, if it sells in 8 months, that annualizes out to substantially better than the cost of interest on your credit cards. But what happens if it takes 15 months? So be very smart, prioritize. But if you have access to capital, this is something I would look into. Prefer at VIPfinancialeducation.com. Be on the lookout for some new videos coming out, guys. We're going to be talking about a lot of the stuff that's going on right now. I've just been so swamped and enjoying this summer. It's been amazing. Hope you guys are ready for a great fall. I hope you had a great Labor Day. Look forward to getting involved in one of these projects with you. Until then, make it a great day today and keep on cash flowing. Take care.